Hi guys, and in today's video we're going to look at valuations. So I got this article from like a startup magazine type thing, and it's saying that valuations continue to plummet. This is something I've predicted for this year, that I thought valuations were going to start to fall and there'd be more down rounds. Let's have a look. Apparently the first quarter of 2023 saw European valuations remain flat and VC deal making slow down even further, according to a report by PitchBook. Later stage valuations have seen the biggest drop in the past 18 months. And analysts and investors are saying they're not going to go up again. Later stage takes the highest hit. The average early stage valuations from Series A to C are down 23% from Q1, while later stage Series C plus have fared much, much worse, registering a year-on-year decline of 77%. That might be, it's not clear if that's on money raised or on valuations. I guess it is probably on valuations. Things are ticking downwards, but this can actually be an interesting thing, and keep watching because I'm going to share my views throughout. So Series E plus, which is quite late in the valuation cycle, saw a bump largely due to major deal flow from German heavyweight solar startup npower raising 215 million at a valuation of 2.2 billion. Despite that, venture growth valuations in Q1 of 2023 are about a third of what they were from the Q3 of peak of 2021. So the author at PitchBook says that the bump valuations of the past will be a thing of the past. Early stage funding holds strong. So when investing earlier, those valuations seem to be better. Average angel, seed, and early stage valuations, which is most of the videos that I cover on this channel, have been more robust, even inching upwards. For example, Ready Burgers is not so far off the original valuation they're raising at the moment. Average valuation of an angel round is 7 mil. Seed stage starts valued about 10 mil, and early stage at 32 million, and these in euros actually. So that's about, oh, they're asking me to sign up, which I'm not going to do. They're talking about down rounds being on the rise, and I have seen that on this channel as well. There was a down round of 25% by Miso Robotics that earned them a institutional investment of 15 million still, a down round. And those I expect to keep happening. I've talked about other companies, and guess what? Here we go. He reckons there's dozens of companies working with reduced valuations, and one that I talked about in my crypto and fintech valuations video, Revolut. Wish I could short Revolut. I would have shorted the fuck out of it, and the valuation has fallen 50%. That's something that you heard it here first on this channel. I was talking about Revolut and Monzo and a few other fintechs having way too higher valuations, and there you go. Anyway, the chap says that it's surprising so far Klarna is the only VC-backed European giant to announce that it's taken a valuation haircut. He thinks there'll be more already, and I do as well. I think a lot of pre-profit companies are valued a bit too highly. He thinks that once interest rates go down, that could be a bloody long time away. Capital and borrowing costs are going to flatline. It will unlock capital and borrowing costs are going to flatline. What do I think about this? Well, I think there are certain sectors that are more affected and impacted than others. Fintech being one of them, crypto being another. These red hot sectors. And I was thinking at the time, I invested in fintech. I'm not like immune to this, but I was very cautious with investing in the types of fintechs that I did invest in. For example, Moneybox, which is almost like an asset manager. They don't actually manage assets, but they kind of take a share of assets. So their valuation is very different from fintechs that get involved with low margin activities like debit cards or credit cards, a la Revolut and Monzo. They at the moment they haven't got into asset management or lending, which is the higher profit, or investment banking. These are higher profit areas within fintech, and they're nowhere near them. And I'm not even sure the FCA will allow them to go into those spaces. It requires different personnel, different approach to doing that kind of banking. And those consumer-facing fintechs, I think, have the most risk in terms of valuations, especially when they're very far away from profit, and especially when they're targeting areas within banking which are low margin. It costs a lot of money to acquire those customers, and those customers might, those customers might already be banking with a large bank, and they're probably not going to want to shift their mortgage or change their other habits to go with Revolut. I might be wrong on a multi-decade basis, but in the next few years, I don't see it changing with those fintechs. Similarly, with consumer startups that are not gaining traction, maybe they were just going after revenue, maybe they were just going after users, and they now need to switch to trying to generate a profit. They may find it quite difficult to raise money. So to be honest, I'm thinking those guys, even if they've got a very good, plausible roadmap, if they don't know a lot of people or have a very loyal fan base or investor base, they may struggle to raise a lot of capital. And I think what's going to happen in the foreseeable future is a lot of companies, whether they're B2C or B2B, are going to have to ensure that they're very efficient, that they get to profit quicker, and that they can show good growth metrics and that show that the power of their companies. Because in this market, valuations are going to get a real haircut, and investors have talked about most people having a cut in terms of their the share of wallet that they can put into investing is going to be trimmed with the cost of living crisis, mortgages going up, general uncertainty, and mass layoffs. That's going to cause angel investment to probably tick downwards. And I think those companies that are showing greater potential and greater growth are going to be the least affected and impacted. Let me know what you guys think in the comment section below, and make sure to check out my other videos on investing in startups, listed equities, property, etc. Remember, guys, that knowledge is power, especially the right kind of knowledge, and progress is everything. I'll see you guys in one of these next upcoming videos that might indeed help you. Take care.